Hello Sebastian, congratulations on a strong set of full year results. It's been very pleasing to see the company evolve over recent years. And it seems that every year builds on the success of the previous. So yet another successful year, but how was 2021 different from other years?
Hello Scott, pleasure to be talking with you again. 2021 was a very successful year for us, and it's really the culmination of all our hard work over the last 5 years to transform the company. If you remember, between 2016 and 19, we focused on building Hiti and Houndé. In 20, we focused on reducing our net debt, and we solidified our position in West Africa by consolidating Semafo and Teranga into the company. And last year, after reaching a net cash position, we started rewarding shareholders with the launch of our shareholder return program while continuing to strengthen our balance sheet.
Sebastian, when looking at your 2021 results, I noticed that you scored the year against 5 key indicators. Could you walk me through those?
Well, Scott, for me, those are more than just indicators. They are commitments to our shareholders. So it's important we track our success against each of them. The first is production target, and we're pleased to have achieved another year with 1.54 million ounces produced, beating our guidance. Second is the all-in sustaining cost target. We achieved $885 per ounce, which was within our $850 to $900 per ounce guidance range, despite the macro backdrop of inflation. This marks the 9th consecutive year of meeting or exceeding production and cost guidance. Given this strong operational performance, the group generated $1.2 billion in operating cash flow, which allowed for significant flexibility in covering our capital allocation priorities. The third one is our leverage target, where the long-term target, even during construction phases, is to be below 0.5 times net debt to EBITDA. This year, the goal was to re-establish a net cash position after absorbing $332 million of net debt from the Teranga acquisition. We're happy to have met this target with a healthy net cash balance sheet of $76 million at year end. The fourth one is our shareholder returns program, where our target was to return a minimum of $125 million in the form of dividends. We had said that if the gold price was above $1,500 and our leverage was below 0.5 times, we could be well positioned to pay excess returns, and that's exactly what we've done. We paid $140 million in dividends and added approximately an additional $140 million in buybacks during the course of the year. This clearly demonstrates how serious we are about returning value to shareholders. And the fifth one is exploration and keeping the organic growth pipeline healthy. We targeted the discovery of 2.5 million ounces of indicated resources in 21, and we beat this target, discovering more than 3 million ounces at less than $25 per ounce. We also achieved our 5-year exploration target of discovering 10 to 15 million ounces, having delineated over 11 million ounces by year end. Given the highly prospective region we are in, the consistent success of our exploration programs, and the methodology we use, we recently published a new 5-year target to discover between 15 to 20 million ounces by 26.
So looking ahead to 2022, what can investors expect from Endeavour?
Well, Scott, investors can expect us to deliver against the long-term target we set across the business and maintain a disciplined approach to our capital allocation priorities. On the operations, while we are already a low-cost producer compared to our peers, I believe there is still much we can do to continue to optimize our assets, and in particular those that we recently acquired. Given the inflationary pressures, this is an important lever to maintain cost at the near $900 per ounce mark. We expect to generate strong cash flow this year, which means that we will again have significant flexibility to address our capital allocation priorities and return excess cash to shareholders. We will continue to explore, which has been our bread and butter in terms of long-term value creation, while at the same time we advance the development of key projects such as the expansion of Sabodala-Massawa Phase 2. Throughout this phase of growth, we expect to continue to distribute shareholder returns while maintaining a healthy balance sheet. On the ESG front, we published our new strategy last June, which reflects our bigger size and ambitions. We are making good progress on a number of fronts, and we look forward to providing a detailed update when we publish our sustainability report in May. For investors, working on improving the quality of our portfolio while continuing to build on being a trusted partner means that we can retain the ability to reward shareholders across cycles. When you sum up all the actions we are taking across the group, the result is that we expect to continue to improve the resilience of our business, and that is important to all stakeholders.
And finally, the London listing. Just 2 quarters on from the listing, you must be very pleased about being included in the FTSE 100, which will take place on Monday. What does this mean for shareholders?
Well, it's good news for shareholders, as we expect that this will drive further demand for our shares. Once you are part of the larger indexes and visible to the broader market, investors tend to not only compare you against your peers, but also against other sectors. And I believe that we stack up very well on that front. Looking ahead, we may be considered for more indices later this year, which could drive additional incremental demand for our shares. And following our successful LSE listing last year, we expect to see the full benefits this year. Given that we are the largest pure gold producer on the LSE and the largest by market cap, not to mention our strong fundamentals, we are well positioned to attract new investors looking for gold exposure.
So Sebastian, thank you for taking the time today. Always a pleasure, and good luck with the rest of the year.
Thank you, Scott. As you can see, very excited for 22 and for our plans going forward as we continue to deliver on our strategy. Thank you.